Hello everyone and welcome back to another session. Today we are going to discuss the test your knowledge questions of ICAI module of chapter number 12, Electronic Commerce Transactions. So let's start. Question number 1. Starcart Limited owns and operates a web portal in the name of Starcart and is registered with the jurisdictional GST authorities in Delhi as an electronic commerce operator and is liable to collect tax at source under Section 52. Starcart provides listing services to various sellers for selling the goods to ultimate customers. Besides these, Starcart also sells its own products through the same web portal. So Starcart is an eco who is selling the products of other suppliers and also selling the products of its own. Now, for the listing services provided to sellers, Starcart charges a listing fee at the rate of 10% of turnover of goods sold by the seller in a particular month. Such listing fee is recovered from the seller irrespective of any return of goods sold through Starcart. The customers can choose from wide range of goods listed on the web portal and place an online order for the goods. The payment is made by the customers through the payment gateway in online mode only. At the time of monthly settlement, Starcart makes a payment to the sellers after adjusting tax collection at source at the applicable rates. The invoice of the goods sold on Starcart is issued by the seller in the name of customers and tax is charged on the basis of location of seller and customer. The goods are shipped directly by the seller to the customer and there is no responsibility of shipping the goods of Starcart for such third party sellers. Okay. So Starcart is not supposed to supply the goods. Okay. Goods are directly shipped from the suppliers. Now, in case of return of goods by the customer, the shipping is arranged by Starcart. So in case of return, shipping is arranged by Starcart and it charges a fee equivalent to 20% of the value of goods returned as cancellation charges and refunds the balance amount to the customer. Further, 10% of value of goods returned is collected from the seller by Starcart as handling charges. So Starcart is collecting handling charges from the customers 20% and from the suppliers 10%. Now, in the month of January, Pulkit, a resident of Rajasthan, purchased following goods from Starcart: laptop having a value of 50,000 and printer having a value of 10,000. Both the products are sold by Infacom Limited, a seller listed on Starcart and registered under GST in the state of UP. Then, mobile phone having a value of 30,000 sold by Starcart in its own capacity and CCTV camera system having a value of 1 lakh sold by Secure World listed on Starcart and registered under GST in the state of Gujarat. Now all the amounts given above are exclusive of GST. The opening balance of input tax credit for relevant tax period for Starcart, Infocom Limited and Secure World is nil. So they don't have any opening balances of their input tax credit. There is no other inward or outward supply transaction for Starcart, Infocom Limited and Secure World in January apart from the above mentioned transactions. Subject to the information given above, assume that all other conditions necessary for ITC have been fulfilled. So ITC can be claimed subject to the above things. Now, GST is applicable on all inward and outward supplies at the rates of 9% and for IGST the rate is 18%. You have to compute the net tax liability including amount collected as TCS of Starcart Limited and net GST payable in cash after set-off of credits if any of Infacom Limited and Secure World for the month of January. Okay, so you have to find the net tax liability. So let's find. See, first of all, we will have to collect TCS from Infacom Limited on supply of laptop and printer to Pulkit. Okay, so the total value was 50,000 plus 10,000, that is your 60,000. On 60,000, I will have to collect 0.5% TCS. Okay, now this will be IGST. Why? Because Pulkit is registered in the state of Rajasthan. Okay, and my supplier is located in the state of Uttar Pradesh. So this is an interstate supply of goods. So IGST is applicable, and IGST TCS will be collected at 0.5% of 50,000 plus 10,000, that is on 60,000 you have to calculate 0.5%, which comes out to be rupees 300. Now, on the second transaction about the mobile phone sold by Starcard Limited. See, GST to be paid by Starcard Limited on supply of mobile phone made in its own account. Now, since Starcard is an e-commerce operator and it is also selling goods on its own name, so it is not supposed to collect TCS for that particular sale, but here Starcard Limited is supposed to pay GST. Okay, so for GST, IGST the rate was 18%. So we have to calculate 18% on value of 30,000, that is the value of my mobile to be sold. Okay. Now why it is IGST? Because see, Starcard Limited is located in Delhi and place of supply is Rajasthan. Okay. So here on 30,000, 18% comes out to be rupees 5,400. Now see, this point you have to remember, that since supply has been made by Starcard on its own account, no TCS needs to be collected. Now, TCS to be collected from Secure World on supply of CCTV camera system to Pulkit. Now, the Secure World is located in Gujarat and Pulkit is in Rajasthan. So again, this is an interstate supply, IGST and TCS of 0.5% on rupees 1 lakh. Okay. So on 1 lakh amount, your 0.5% comes out to be 500 rupees. Now the last transaction, that was the listing charges. Okay, so listing services provided by Starcard to Infacom Limited and Secure Limited at 10% of turnover for the month of January. So total turnover was 60,000 in case of this Infacom Limited and 1 lakh for Secure Limited. So total turnover turns out to be 1,60,000. Now 10% of this, that is the amount of your listing charges, and on the amount of listing charges you have to calculate IGST of 18%. Okay, so on 1,60,000 into 10%, that comes out to be 1,06,000. Sorry, I'm so sorry. Please ignore my maths. Okay, so on 1,60,000 into 10%, that comes out to be 1600. Okay, 16,000, and on this 16,000 you have to calculate 18%. 18% IGST. Your IGST comes out to be 2,880. Now your total GST liability including your TCS amount comes out. You have to add all these amounts. Okay, so you have that comes to be 9,080. Now computation of net GST payable by cash. So to compute the net GST payable by cash, we will reduce any income ITC credits that are available to us. So my gross GST liability, 18% on turnover. My turnover is 50,000 plus 10,000, that comes out to be 60,000. See, we are calculating for Infacom Limited, so it had made supplies worth rupees 50,000 and rupees 10,000. So 18% on my 60,000 comes out to be 10,800. Now in this, ITC of GST payable on listing services. So listing services, Infacom Limited had provided of value 60,000 into 10%, that is your 6,000. On this 6,000, my 18%, that comes out to be 1,080. So that I will get ITC of that amount. So my net GST payable from electronic cash ledger will be 9720, and from this I have TCS credited 300 rupees. So again that TCS I will be deducting, and my net liability will come to 9420. Now we will calculate for Secure World in a similar manner. So Secure World had provided the value of 1 lakh rupees. Now on 1 lakh my 18% GST comes out to be 18,000. Now ITC of GST payable on listing services. So listing services, my value is 10,000. Okay, 1 lakh into 10%, that is my 10,000, and on this 10,000 I have to pay 8, comes out to be 1,800. So my net GST payable here is 16,200, and from this I will be reducing my TCS credit of 500 rupees. So my total net GST payable in cash comes out to be 15,700. Okay. So question number 2. Whether the rate of tax of 0.5% notified under section 52 is CGST or SGST or a combination of both CGST and SGST. This is a theoretical question. It is a combination of both. See, the rate of tax as notified under CGST Act is payable under CGST, and equal rate of TCS is expected under CGST Act, also in effect, aggregating to 0.5%. So 0.5% is combining of CGST and SGST. It is total amount. Okay. It is not 0.5% for CGST and 0.5% for SGST. It is 0.25% for both SGST and CGST. Now question number 3. Is every e-commerce operator required to collect tax on behalf of actual supplier? This is also a theoretical question. So yes, every e-commerce operator is required to collect tax where consideration with respect to supply made through it is being collected by the e-commerce operator. So if your e-commerce operator is collecting the consideration, then in that case e-commerce operator is required to collect tax. But there are three exceptions to this, which are they: if however, no TCS is required to be collected in the following cases, in which three cases: on supply of goods services notified under section 9(5) of the Act, and on exempt supplies, and on supplies on which recipient is required to pay tax under reverse charge mechanism. So in these three cases, ECO is not liable to collect tax. Now, question number 4. State whether the provisions pertaining to tax collected at source under section 52 will be applicable in below mentioned scenarios. Feeten sells watch on its own through its own website. So in case you are an eco and you are selling your own goods through your own website, then you are not supposed to collect tax. Collect tax at source. Okay, TCS is not required to be collected in that case by the eco. Then ABC Limited, who is a dealer of Feeten brand, sells watches through Flipkart and Eco. So here in this case TCS will be applicable. Okay, let's check the answer. See, as per section 52, every eco not being an agent shall collect an amount calculated at such rate not exceeding 1% as may be notified by government on the recommendations of the council of the net value of taxable supplies made through it by other suppliers, where the consideration with respect to such suppliers is to be collected by the operator. Hence, if the person sells on his own, provisions pertaining to TCS won't be applicable. Okay, because you're not selling on behalf of someone else, but you are selling on your own through your own website. So it doesn't matter whether you are an eco. Okay, if you are an eco but you are supplying someone else's goods through your website, in that case you are supposed to collect tax at source. So in the second case, where ABC Limited, who is a dealer of Feeten brand, sells watches through Flipkart, then the provisions of TCS will be applicable to Flipkart. Okay. Then question number 5. A is an e-commerce operator supplying goods through its electronic portal in the capacity of an agent. The goods belonging to B and the consideration for such supplies is received by A and remitted to B as per the contractual agreement. A requires your help in arriving the rate at which tax shall be collected from the amount received by it against its suppliers. So here, as per the provisions of section 52, TCS provisions shall trigger only when ECO is receiving the consideration for supply from the recipient of supply. So only when ECO is receiving the payment, in that case only your TCS provisions will be applicable. In the present case, the supplier, that is the hotel, is directly receiving the consideration from recipient of services, that is X. Hence, the present transaction shall not trigger TCS provisions under section 52. Okay. So see, as per section 52(1), TCS provisions are not applicable in cases where ECO is agent of the supplier. Okay. In the present case, A being an ECO is supplying goods through electronic portal in capacity of an agent, and hence the liability to collect TCS as per section 52 shall not arise in this case. So when A, who is an ECO, and he is supplying the goods through electronic portal in capacity of an agent. Okay, so when you are uh, supplying goods purely in the capacity of ECO, in that case only your TCS provisions will be applicable. So TCS provisions are not applicable in this case. Now question number 6. Okay, what it says: X booked a hotel in Udaipur, Rajasthan through an ECO for amount of rupees 25,000. As per terms and conditions, the amount was payable at the hotel at the time of check-in. Whether TCS provisions shall apply in the present case. Now see, when ECO is not collecting the amount, then in that case ECO is not supposed to apply the provisions of TCS. Only when ECO is collecting the payments on behalf of the provider of services or goods, then in that case only your TCS provisions will be applicable. So here in this case, TCS provisions will not be applicable. Let us see the answer. So see, as per the provisions under section 52, the TCS provisions shall trigger only when the ECO is receiving the consideration for supply from the recipient of the supply. Okay, so only in case when ECO is receiving the payment, in that case only your TCS provisions will be applicable. In the present case, the supplier, that is the hotel, is directly receiving the consideration from the recipient of the services, that is X. Hence, present transactions shall not trigger the TCS provisions under section 52. Now question number 7. Sumitra Nandan books a hotel Hill Point Residency registered under GST via Zitcom Technologies Limited and ECO, who in turn is integrated with another ECO, Tech Super Limited, who has agreement with Hill Point Residency. You are required to determine who is required to collect TCS in the given case. So in cases where you have two ECO, you have to see that the ECO who is receiving the amount, that is your supplier side ECO, will be liable to TCS provisions. So let's see the answer. See, the given case is a case of multiple e-commerce model wherein a customer orders supplies via ECO 1, who in turn is integrated with ECO 2, who has agreement with the supplier. In this case, ECO 1 will not have any GST information. Okay, so TCS to be collected by that e-commerce operator who is making payment to the supplier for the particular supply happening through it, which is the case of ECO 2. So in the given case, TCS is to be collected by Eco Tech Super Limited, who is making payment to Hill Point Residency for the supply happening through it. Now the last question, I think. Yes. Okay. AB Private Limited, Pune, Maharashtra provides housekeeping services. The company supplies its services exclusively through an e-commerce website owned and managed by High-Tech India Private Limited, Pune. The turnover of AB Limited in the current financial year is 18 lakhs. So see here, AB Limited will have the threshold limit exemption. Okay, it will be a case covered under your section 9(5) exemptions. So let's see. See, as per section 22, every supplier of goods or services or both is required to obtain registration in the state or union territory from where he makes a taxable service if his aggregate turnover exceeds threshold limit in a financial year. However, Section 24 enlists certain categories of persons who are mandatorily required to obtain registration irrespective of their turnover, and ECO falls under such category. Persons who supply goods or services or both through such ECO who is required to collect tax at source under Section 52 is one such person specified under Clause 9 of Section 24. So if you are a person who is supplying any goods or services through an ECO, then you are compulsory, mandatorily supposed to be registered. But where the ECO is liable to pay tax on behalf of the suppliers of services under a notification issued under Section 9(5), the suppliers of such services are entitled to the threshold exemption. So, Section 245 defines ECO as any person who owns, operates or manages digital or electronic facility or platform for the electronic commerce. Electronic commerce is defined under Section 244 to mean the supply of goods or services or both, including digital products over digital or electronic network. Since Hi-Tech India Private Limited owns and manages a website for e-commerce where both goods and services are supplied, it will be classified as an ECO under your Section 245. Now, notification issued under Section 9(5) specifies services by way of housekeeping except where the person supplying such service through ECO is liable for registration under Section 221 as one such service where ECO is liable to pay tax on behalf of the suppliers. Okay. So the services of housekeeping comes under these exemption wherein the ECO is liable to pay tax on behalf of suppliers, and when your service is covered under your Section 9(5), then in that case if you are not crossing the threshold limit, then you can claim that exemption of not getting registered. So in the given case, AB Private Limited provides housekeeping services through an ECO. It is presumed that Hi-Tech India is an ECO which is required to collect TCS under Section 52. However, housekeeping services provided by AB Limited, which is not liable for registration under Section 22(1), as its turnover is rupees 8 lakhs, which is less than rupees 20 lakhs, and is a service notified under Section 9(5). Thus, AB Private Limited will be entitled for threshold exemption for registration and will not be required to obtain registration even though it supplies services through ECO. Okay, so you have to remember this point. I hope that was clear. And if you have any doubts, you can reach out to me in the comments below, or you can join the Telegram group wherein all your further updates will be shared. You can provide your feedbacks and reach out for doubts in the Telegram channel also. I hope this session was useful to you. Thank you. I shall see you in the next session. Till then, study well. Have a good time.